Everything I do is whoa. At the bench, jumping out the bed.
Hey man, say man, we are back with another video. In today's video, we are going to break down my trade. I took two trades actually, one L, one W. The W ended up making me end with a profitable day. So that is good. However, the first trade I took was piss poor. So I'm gonna show you why I took it. I'm gonna show you why my ass should have not been in that damn trade. But nevertheless, we're gonna break it down. All right. Today is Columbus Day, and I don't know if it's a bank holiday or not, but we did end up getting movement. So I traded today. I actually didn't even realize it till somebody in my Discord said it. So we did end up trading. But like I said before, took a L on the first one, took a W on the second one. I'm gonna show you why I end up taking both trades, why one lost and one won. So without further ado, let's get into that breakdown. All right, so you know what we do, you know how we start, you know what I'm saying, the strategy. We start off with the daily time frame. We mark off our previous day high and our previous day low. I got a lot of stuff on here right now just because I have to do my webinar that I did not end up doing Sunday just because I had some unexpected things happen. So the webinar is today. If you're not in the Discord yet, make sure you get in the Discord because it's free. So you still have a chance to get in there before we start the webinar. We're going to be going over my past trades from last week, why I end up getting into them. We're going to be going over any questions you guys have. So if you have questions based off your trades, or if you just have some psychology questions or whatever it is, hit me. You know what I'm saying? I'm here to answer them. That's what the webinar is for. And then we also going to go over some psychology stuff, though. So, and actually, let me say this. Let me bring myself back real quick. Today's webinar, if you're not in, please get in because today's webinar will be focusing on the two ways I get into the market. If you don't have my strategy and you kind of want to get a tidbit snippet of some very important things that I have in there, you better hop into the Discord because today is the day that I will be going over, again, the two ways that I get into the market. You know what I'm saying? Super informational today. Like there's gonna be some gems dropped today. So if you're not in it, make sure you check it out because again, I will be showing a visual representation of exactly what I look for and how I get into the market. All right. So make sure you tap in if you have not. All right, let's get back to what you guys came here for, which is the trade breakdown. All right. Start off with the daily time frame because everything that I do is based off the daily. Mark off our previous day high and our previous day low, right? Of this particular candle right here, Friday's candle. We'll go down to the 1 hour. So on the 1 hour, initially I had my bias was buys, right? For the day, my bias was buys. Now we did have a great movement today, as far as bullish movement, but where I got in and where I thought price was going was not it for the day. You know what I mean? Like I got that wrong. I thought price was going to fill in this gap today. But I think after reviewing and analyzing a little bit more, I think we have room to come down before we come back up, just because if I'm looking at this particular move right here, this move up, we are in a discount, which is why this particular push, this huge push right here happened. But I do know that price or oil particularly loves to trade to that 61%. So I think that's a big reason why we haven't pushed up all the way. I could be wrong, you know what I'm saying? Because we were almost there. We almost hit that 61%. So I could be wrong in that we might not come all the way back down here. But I do think that, one, price loves to trade in that 61%. Two, we were below the previous day low. And three, I did not wait for that 15-minute, which is a great indicator on oil. I don't know about everything else, but on oil, that 15-minute structural shifts play a big part. So that's why I lost today's trade. But let me break it down just a little bit further, right? So if I go to the 5-minute, the reason why I was looking for buys, as you can see, right? So we're here right now, right? I get into the market is around 8:15-ish, right? So we missed the initial push up, right? These highs, if I did get into the market, would have been my target because these are the last areas of liquidity, right? The next draw on liquidity, I should say. We came up, broke structure down, came back up and broke this, ended up breaking this structure to the upside. We did leave a fair value gap. Now, this is not the fair value gap that created the market structure shift unless you're on the 1 minute. If you're on the 1 minute, then it did create a market structure shift. But this is not the fair value gap that created the market structure shift. This one is, right? Either way go, we tapped into that fair value gap, respecting it, and then coming up into the buy side liquidity, right? Now, I believe I got into this because, one, I was thinking, okay, we're about to hit this gap right here, right? Two, we are pushing heavily, like extreme bullish pressure. So I'm like, we gotta be going up. So I'm not thinking about the fact that we haven't broken structure on the 15 minute. I'm not thinking about the fact that, you know what I'm saying, we haven't come into, we haven't on the higher time frame taken some liquidity or drawn into the 61%, right? And I'm not paying attention to the fact that we're below this 200 EMA. So I'm trading into it. I'm only paying attention to the 5 minute, which was, for one, the worst thing I could probably do, right? Because that's never something that I do. I always pay attention to all these time frames you see up here. I pay attention to all the time. And today, for some reason, I did not, just because I was so locked in on my bias that I was not even thinking, right? Another reason why this was a horrible trade as far as overall, I shouldn't have gotten into this trade, for one, because if I go to the 15 minute, and why do I use the 15 minute a lot is, again, I know oil, like the 15 minute and the 61% are very much so great indicators of the trend, right? So 15 minute did not close above this high. And because I was only paying attention to the 5 minute, I did not see that. So if I would have seen that the 15 minute did not close above, I would be like, okay, we're respecting this area and we took liquidity, we're probably coming down to take some more sell side. So if I were to pay attention to that, I probably would have not taken this trade. And then the second reason why this was kind of like a piss poor trade is just because also on the 15 minute, this is not in a discount, right? So if I go from this low to this high, my entry should have been somewhere down here if I wanted to take buys. It should not have been above this 50% because I know price is going to trade back down. Like, I know these things and I still did not pay attention to it. So again, first trade, piss poor. It is what it is. Lesson learned, right? All these things I'm learning. This is why I do these trade breakdowns, not only for you guys, but for myself. It definitely is kind of like back testing, or in a sense, it's kind of like back testing, right? What went wrong? How could I do better? What are the things I need to pay attention to? So those are the reasons why I end up getting clapped on the first trade. Second trade, it was a W. And this one was simply because we're holding the 15 minute, right? So we took buy side. The next thing we probably want to do is take some sell side. So if this is the buy side that we want to take, and we did, the next point of interest would be, and we're holding, the next point of interest, if I wanted to buy, would have been if it's held this point, but it did not do that, right? On the 5 minute, we had a market structure shift here. So I'm like, okay, we probably want to come down and take some more liquidity if we're shifting structure on the lower time frame. Also, on the 15 minute, you can see that we're right at that 200 EMA. And on the 5 minute, around that area is supply. So those are two confirmations that I want to sell. Actually 3, right? 200 EMA on the 15 minute was sitting right at the 5 minute supply. The second one was we wanted to take some liquidity, right? And then the third one, we are at the previous day low. So we're below the previous day low, and we're retesting it. So if it holds, I want to sell, and I want to sell down to either this low or just the next draw on liquidity, which would have been this low. And that's what I end up doing. I end up taking the sell here and getting out here, which was a little over my 2-to-1 risk to reward. But again, if you see how price was moving and how far it was pushing down, or how hard it was pushing down, that was the main reason why I ended up just holding that. So here's the first trade I took, which was a big fat L. Second trade I took, which was a W. This is why risk management is a big deal, just because if I would have risked too much here, I probably couldn't take this second trade, which I probably shouldn't have taken the second trade, just been done with the L. But we were so early in the day that I'm like, price has to be trying to do something else if we're making a move like this right at that 9 o'clock time, right? So I just was patient and was trying to see what price was doing, and I ended up seeing how it respected this supply, closing below the 200 EMA on the 5 minute, and then literally I thought we were coming back down here, but as you can see, we're pushing back up. Either way it goes, I end up taking advantage of this move here. So I hope that makes sense. Again, lesson learned. Every time I do these videos, it's a lesson learned, something I can take away from it. 1, wait for fucking confirmation. 2, make sure that if we're trying to buy, if we're coming on down, retracing down over a big higher time frame move, that if I'm buying now, or if I'm looking to buy, I'm buying at the area of interest that I know price wants to come down to. One, specifically on oil, it's the 61%, right? Will it always do that? No, but in this particular case, I think that's what it's trying to do. And then 2, not entering off a piss poor area of interest on a small time frame. Again, I showed you guys that I entered this one too high, right? Like, even if I were to have entered, let me bring this back up. Even if I were have to enter this below the 50%, right, of this move, I probably would have won something. I probably would have won this trade. You know what I mean? I probably would have taken profit partials, you know what I mean, because it was coming on down. But it wouldn't have been a loss. It probably would have been either a break even or partials for me, because I took this trade after it had retraced down into a discount. You feel me? Like, things like that matter. Making sure that my entries make sense. Making sure that I'm not trying to chase. It's not money that I was chasing today. It was just I was too focused on my bias. My bias was buys, and I was too focused on that and got caught up. It was somebody in my Discord even came out and said, bring myself back up. Somebody in my Discord even came out and said, hey, looking for buys on CL, and I was like, hell yeah. Right, even before I even marked off my finished marking off my charts, right? That is a red flag. Like, I should not be doing that. So, you know, it is what it is. Lesson learned, and I will be making sure that I do not do that moving forward. You know what I mean? Risk management is key. Obviously, I was able to win back plus more of my next trade, so I didn't risk too much on my first trade, which is beautiful. But yeah, that's all I got. Again, webinar is going to be today, 6 p.m. Central Time, 7 p.m. Eastern. In the Discord. If you're not in the Discord already, make sure you tap in. Click the link in the description. Also, if you want my strategy, it's in the link in the bio. I will be giving small tidbits on my Discord today in the webinar of my strategy. So if you're not tapped in, make sure you tap in. And yeah, that's it, man. W day as far as P&L goes, wouldn't really consider it a W day as far as trading goes, just because there was multiple indicators that why I shouldn't have gotten into certain trades. So it is what it is. Lesson learned. We're going to come back tomorrow with a fresh set of eyes, and we are going to follow our trading plan through and through, just because that's what makes us profitable, right? So that's all I got. I will see you guys on the next one.
Vibe blowing on my jet. Got the loud jumping on the pad. Everything I'm on slack. Everything I do is fuck. Hey, got the bands jumping out the bag.